Imagine waking up in Florence, 1348. A plague cart rattles past your window. The silk you shipped to London never arrives. Your family business may die with you, but somewhere, in the middle of this chaos, someone is quietly inventing an idea that defies fear itself. What if risk could be profitable? What if danger could be turned into business? This is the story of how Renaissance Florence, a city built on art, also gave birth to something far less poetic, yet far more powerful: insurance. A tool that turned uncertainty into wealth, that transformed fate into math. Florence in the 14th century wasn't just paintings and cathedrals. It was banks, trade routes, plagues, pirates, floods, rival states, and a constant sense of doom. You could lose everything: a storm, a bad crop, a burning warehouse, a stolen cargo ship. But here's the twist. Florence wasn't scared of risk. Florence fed on it. Merchants invested in distant voyages. Families supported explorers who might never return. Bankers financed kings who might never repay. By 1400, almost 70% of Florence's economy touched international trade in some way, which meant almost 70% of Florence's wealth was exposed to disaster. To survive, they needed a new way to cheat fate, to buy safety. So how did Florentines do it? Picture a ship leaving Tuscany for Bruges. On board, silk, spices, dyes, worth fortunes. But the sea is unforgiving. Merchants feared ruin with every voyage. So they invented a new parchment, the insurance contract. For a fee, maybe 5% of the cargo value, a wealthy backer agreed. If your ship sinks, I'll pay you back. Simple, right? But here's the genius. The insurer wasn't really promising safety. They were betting that ships wouldn't sink. Insurance was gambling, legalized, legitimized, and dressed in Latin clauses. It worked on probabilities long before probability theory existed. Merchants became mathematicians. How many ships sink per 100? What's the cost of storms? What premium protects us? They essentially built early actuarial science, centuries before calculators. Insurance was like selling umbrellas on a sunny day, and getting rich because storms were rare. The Florentines discovered something shocking. Risk, properly priced, became profitable. The more fear people had, the more premiums insurers could charge. It was capitalism's first judo move: turn anxiety into profit. But nothing this clever stays clean. The Medici, Strozzi, Bardi, power families realized insurance wasn't just protection. It was financial leverage. They began insuring not just ships, but lives, loans, wars. They insured the Pope. They insured kings. They insured themselves. And then came the disaster. One by one, kings defaulted on debts. Wars dragged on. Piracy surged. The Black Death wiped out half the continent. Insurers were swamped with payouts. Fortunes evaporated overnight. In 1345, the Bardi and Peruzzi banking families collapsed. Florence's credit system imploded. Insurance suddenly looked like poison. But this is the twist. The crisis didn't kill insurance. It refined it. Merchants rewrote contracts. They diversified risk. They introduced reinsurance, where insurers insured each other. They invented what we now call risk pooling. And the Medici, watching the ruins, realized something. Risk was not the enemy. Mispricing risk was. This was the turning point. Florence didn't abandon insurance. It professionalized it. The aftershocks rippled outward. Florence invents modern finance. Insurance taught Florentines to model uncertainty. That mindset birthed double-entry bookkeeping, international banking, credit networks, underwriting guilds. Insurance trained a society to think probabilistically. Europe copies it: Venice, Genoa, Amsterdam, London. Every trade city adopted the Florentine trick. Lloyd's of London. Its DNA traces back to Florentine marine policies. Insurance creates empires. Because now exploration was calculable. merchants could dare bigger journeys to Africa, Asia, the New World. Insurance didn't just protect wealth, it made colonization viable, for better and for worse. Insurance rewires human behavior. Once people could transfer risk, they took more risk. Businesses scaled. Banks loaned aggressively. Innovation exploded. Florence proved that risk, once tamed, produces growth. The modern world emerges. Fire insurance, life insurance, pension insurance, health insurance, car insurance, even insurance on insurance, all share Florence's basic logic. Buy certainty so the future can happen faster. And today, insurance touches everything. Airlines hedge fuel. Hollywood insures actors. SpaceX insures satellites. Crypto firms insure hacks. AI labs insure regulatory backlash. We live in a Florentine world, where fear is a commodity. The Renaissance gave us Michelangelo and Dante, but it also gave us something quieter, a worldview. The idea that risk is not fate, that uncertainty can be priced, shared, traded. Insurance is humanity's most audacious idea, a belief that disaster can be negotiated with. Yet here's the unsettling truth. Insurance doesn't eliminate danger. It reshapes it. It distributes consequences. It encourages boldness. It fuels collapse and rebirth. Florence learned this the hard way. We may be learning it again. In a world of algorithmic trading, pandemics, climate chaos, we are still, in essence, writing Renaissance contracts with modern ink. So here's the question for you. Is insurance humanity's greatest safety net, or its most dangerous illusion? Tell me in the comments. Does transferring risk make us wiser, or just bolder in ways that eventually backfire?